The talk of the town is TCS Buyback. Tata Consultancy Services has announced a buyback at Rs 4,150 per share. In the last 6 years, this is their fifth buyback. TCS has bought back shares in the years 2017, 2018, 2020 and 2022, all at a premium ranging from 10% to 18%. Here is what to expect from this buyback. As a retail investor, what should be your call? Let us do a quick analysis and reserve our position. Welcome to holisticinvestment.in. TCS at a glance. TCS is an IT service company incorporated in the year 1995. It is the second largest Indian company by market capitalization and it is among the most valuable IT service brands worldwide. The company was listed in the year 2004. It has a market cap of 12.89 lakh crore. The current return on equity is 46.91 and return on asset is 29.57. Now let us look at the stock's performance. All values are as of 16th October 2023. Highlights of Q2. Revenue at rupees 59,692 crore. Constant currency revenue growth plus 2.8% year on year. Operating margin at 24.3%. Net income at 11,342 crore. Net cash from operations at 11,823 crores. The current dividend per share is 9 rupees. Record date is 19th October. If you look at the table here, it shows the annual performance of TCS. You can compare the performance with that of S&P BSE Sensex and S&P BSE IT. The performance is more or less in tandem with the S&P BSE IT. Last year, the company demonstrated its strength amidst a decline in the whole IT sector. The individual downturn is low compared to the IT sector as a whole. Now, let's get into the agenda. An overview of TCS Buyback. On October 11, 2023, the company's board approved the buyback of shares worth 17,000 crore. The company will be buying back 4.10 crore shares, amounting to 1.12% of total equity. The maximum price of the shares buyback has been set at 4,150 rupees, which is at a premium of 14.95% to the closing price on 11th October. The buyback will be done through the tender offer route and it includes both BSE and NSE. TCS announced that buyback is through tender offer, but what does tender offer actually mean? The term tender offer refers to a company's offer to repurchase its own shares or other specified securities through a letter of offer. To offer the share for buyback, the shareholder must contact the selling member, that is a broker listed with specified stock exchange, and use the designated stock exchange acquisition window. Next, we shall look at the small shareholder category tender eligibility. As per SEBI rule, 15% of total tender offer is reserved for the small shareholder category. Here, small shareholder means an investor who has an investment of not more than rupees 2 lakhs in the company as of the record date. Let us assume that the closing price on the record date is 3,900. Then, the retail investor who holds nearly 51 TCS shares is considered as small shareholder. Next, what is acceptance ratio and what is expected acceptance ratio in TCS Buyback 2023? Acceptance ratio is the proportion of shares accepted in relation to those tendered. For example, if you have tendered all your 50 shares and the acceptance ratio is 100%, then all your 50 shares will be accepted. If the acceptance ratio is 50%, only 25 shares will be accepted and the balance will be released post buyback settlement. A higher acceptance ratio implies a better return for investors. In the previous TCS buybacks in the year 2017, 2018 and 2020, the acceptance ratio for retail investors was 100%, but it decreased to around 20% in 2022. The acceptance ratio for the 2023 buyback is expected to be low. To understand this, let us look at the promoters' holding in TCS. The current promoters holding is 72.3%, the total public holding is 27.7%, and the small shareholder category holding stands at 16.44 crores. As mentioned above, 15% of buyback offer of 4.1 crore shares would be reserved for companies' small shareholders, which amounts to 0.6 crore shares. As per the minimum public shareholdings rule, 25% of the outstanding equity shares of the company must be compulsorily held by the public, which means TCS will reach the limit with a 200 to 300 basis point. Hence, the acceptance ratio for the retail category would be low and somewhere around 5%. Next, as a retail investor, what can you expect from this buyback? Please keep in mind that you can participate in buyback offers only if you have held the shares of the company since before the announced record date, that is 20th October. Now, let us analyze the advantages and disadvantages for a retail investor. Advantages: a buyback is a good opportunity to exit. It is offered at a premium price than the current market price. The retail investor need not to pay tax for the capital gains arising out of buyback, is just icing on the cake. The company will pay a flat 20% tax along with the education cess. Disadvantages: the buyback of shares with the surplus cash denotes that the money is not utilized for the development of the company but rather to improve the promoter's stake. The acceptance ratio might be lower than the previous buybacks. Next, what are the advantages from company's point of view? The company's promoter's stake will increase marginally. The current promoter's ownership is 72.3%. It improves the earnings per share. With fewer shares being traded in the market, it drives the demand up and eventually increase the stock price in the stock market. Now, let us look at the tax implications. In accordance with the Income Tax Act of 1961, the company will pay the buyback tax. Any proceeds would be exempt from taxation for the shareholders under the Income Tax Act of 1961 because the company would be paying the repurchase tax. Non-resident shareholders, however, can be subject to additional taxes in their own nation. The letter of offer would include a thorough statement on taxes. Here is our final call on TCS Buyback 2023. Buyback denotes that the company's share price is undervalued. Short-term investors could potentially benefit by tendering their shares in this buyback. You can make quick bucks. Warning: do not buy shares before the record date just to tender for buybacks. You may think that this is a no-brainer, but as discussed earlier, the acceptance ratio might be low and the price might lag post the buyback. Long-term investors should hold their shares as the company's growth outlook is robust. The reason behind this is that there will be a strong demand for IT services in the future. There is a high chance for capital appreciation in the long run. If you are a short-term investor, ride the wave or else play the long game with your investment. Which side of the coin are you in? A detailed blog post on this topic is available in our website and the link is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.